Okay, we're live. So our first video was so good that we had to re-record twice. Uh, a lot of news or big news has come in today with Bank of Canada in its interest rate announcement. There's a cut of 25 basis points, and it is. I mean, how it affects real estate is it's at 2.7% as an overnight rate. What's your initial thoughts?
Yeah, I mean, like, it would have been a surprise if there was no cut or if it was like a really big cut. This is kind of what most of us expected to see, a conservative approach by the Bank of Canada. It is consistent with their conservative approach up until this point. I think the big wild card, we all know this, is tariffs and what that means to our economy and how that directly impacts real estate and our real estate investing.
Yeah, I think Tiff Macklem had said this like in his last uh, keynote speech. He said that there aren't a lot of levers that they could pull um, if these tariffs do come, and they have come. Um, and the presser, he did say along the lines of, the CPI target still within its 2% range, so they're comfortable cutting and potentially cutting even more. Um, I mean, to add to that, I think Trump's a very strategic person. Um, he imposed tariffs overnight, just before our rate cut announcement,
Yep.
and he put tariffs on steel and aluminum, Canadian steel and aluminum. So that obviously we're a country that relies on a lot of manufacturing and resources, not manufacturing, more so resources, uh, and that's a big blow to Canada. So we'll see what happens there.
Yeah.
What do you think of all this? Like,
Yeah, I mean, there's a couple of things. So, one of the things we like to do at Volition is take the news that we're getting, but synthesize it into what this means for our investors. So, a couple of things here. I think that more than ever, it is important to be investing in an area with a diverse economy, a diverse local economy. And we're seeing this, like, obviously, we're Toronto centric. It's one of the things we love about Toronto. And it is something that we're seeing our investors taking a lot of action in the market recently. Investment properties, the prices are down and the interest is down. And this is mostly because mom and pop investors are borrowing their funds for down payment. Few people have a couple $100,000 lying around, but our clients who do have the funds right now aren't relying on borrowing that money for their down payments or taking action. We have one client who picked up multifamily, like 300, 400,000 below asking. He's buying another one now. We've done a lot of investment business in the last couple of months. And it's because this uncertainty has opened up buying opportunity in the Toronto market. You're not getting significantly better pricing. Some cases you are, but really that competition is gone, which means terms, conditions, inspections, having, you know, uh, city searches done on your behalf before you close, stuff like that is in the realm of possibility now. And traditionally in the Toronto market, it's very, very hard to do that. So that's I think one big thing is like, the meat and potatoes, triplexes, fourplexes are great buying opportunities now, and they're cash flowing as well because
yeah,
people who are selling them, they're a little bit more desperate, right? Like real estate, you try to hold on to as long as you can. So if you're exiting at this point in time, there's usually a reason that they're getting out of them. So
yeah,
that's one, and I know you're seeing the same thing as well, Wilson. The other thing is high-end homes. So we have a lot of our clients, they're well off, so they're also buying personal residences, and the oversupply that does exist in the condo market very much exists in the, I call it, two and a half plus price range in the city as well. A lot of developers, smaller developers, who have come in and bought a plot of land to redevelop a home, do an infill project. A lot of them are stuck on this inventory, and they have been for a while. And we're finally starting to see them move on pricing, to the order of a couple 100,000 off what they would have got just 2 years ago. So our clients who are buying homes kind of in the 2.5 to call it $5 million range are seeing good deals right now on those properties. There's a lot of that kind of inventory right now.
Yeah, yeah. And I think what's, I mean, the glimmer of hope is what's keeping the the housing market, or what's more buoyant, is the entry level single family homes,
Yep.
right? Anything in that 1 to 1.5 million for single family homes, like cutting interest rates really does help um, that buyer get out, budget for more, right? And when it comes to these single family homes, they're more of an emotional buy versus an investor purchase, where it all just comes down to dollars and cents. Um, and that last bit is with condos. Condos, the condo story in Toronto is uh, still very, very bleak. I don't think interest rates are really helping all that much, and that's really due to the amount of supply that's coming on the market. It vastly outstrips uh, the demand, um, and that's, the amount of projects that are completing, and also the net new population is declining as well in Toronto. So I think when it comes to single or user focused real estate purchases, it still is that single family home that keeps the market propped up, I would say. Yeah.
Yeah, yeah. There are still rare occurrences of, multiple offers. That is happening
Yeah.
primarily in the entry level market. I think what's interesting too is if you are active in the market right now and you've been going to open houses, they're not like quiet. There's actually people coming out to see places. And it's because, buyer demand, like they've kind of been pushed to the side the last, call it year or 2 years, and their interest hasn't waned. A lot of people have just been waiting by the sidelines for stability. And every time there is stability, you got a flood of activity happening. And then when that stability goes away, people wait again. But the interest doesn't disappear overnight. So, you know, I think that the market's basically looking for stability before those buyers come back. If you're on the buy side, you want to get ahead of it, right? Take
Yeah.
advantage of the instability right now. Take advantage of the uncertainty. If you're in a position to do it, obviously.
Yeah. I mean, once there is stability, there is going to be a bottom and an end to all this tariff talk. Once that happens, the market sentiment will change, and then you will be part of the herd that's going in the direction. So I think the savvy investor or buyer of their home takes advantage of these situations. So a lot of our client base that are investors and are savvy are taking advantage of this situation right now. So
Yeah, I think it's something like 85% of banks are now calling for another 50 basis points before the end of the year. I would not be surprised to see that happening, especially if the impact of the tariffs are felt.
yeah,
It's very early days right now, but if they do drag on longer, I would not. Yeah, I could see that 85% confidence level in that cut rising, and maybe even a larger one than that.
yeah,
It is a wild card, and some people are in a fortunate enough position to take advantage of that.
yeah. We will see. Lots going on in a volatile market.
Yep,
Yeah.
absolutely. Awesome. Thanks everybody for joining us today, and hope we'll see you in person at our next meetup.
See you guys soon.